From 6th position to number 1, India is upgraded in the domestic stock market. This marker is from Morgan Stanley. It's an investment bank based in the United States of America and serves as an important marker of India's economic stability. India, it says, is at the start of a long wave boom and structural reforms that have taken place in the last few years and are currently bearing fruit, unlocking growth opportunities that were previously stagnant. This rating is called overweight. It means that it deserves a higher weightage in terms of investments and would perform better in the future as well. Our aggressive neighbor China on this rating has been downgraded by the brokerage firm, suggesting that the investors should take profits and be very cautious amid the recent rally driven by government stimulus packages in China. But the best part amid all of this, as per Morgan Stanley, is that it is time for foreign investors to re-engage with the Indian market. Now, the upgrade has come in the backdrop of the United States of America losing the AAA status in terms of their economic stability. It's also cut its rating on Chinese stocks to equal weight category now. What worked for us then? This report quotes growth at 6.5% predicted at the end of the decade, macro stability, high household savings, becoming, importantly, an authoritative voice in global geopolitics. So then what does it say about the developed nations? Australia, as per this report of Morgan Stanley, has been downgraded to underweight category. This report is crucial to understand India's standing in the world order. India, it said, is now the top-ranked, most preferred market among emerging markets. Our country's savior right now is our stable economy. India's macro indicators remain resilient and the economy is on track to achieve the over 6% GDP forecast. China shows going half than that in the end of decade, half of what India's growth is predicted. We managed to float despite the COVID pandemic in a country of 1 billion people. When Russia-Ukraine war broke out, India ensured to maintain relationship with both the nations that we have had as historic ties. A debt to GDP ratio is also an indicator of how much a debt a country owes and how much it produces to pay off that expensive debt. The household debt to GDP in India is just 19% compared to 48% for China. You need to remember this. Morgan Stanley's equity strategists, including Jonathan F. Garner, in a note to clients said, India is arguably at the start of a long wave boom, at the same time that China may be ending its one. Simply put, India's future looks to be a significant extent like China's past as it was. But this video is not just about Morgan Stanley, but a larger perception on India in the global world order. Nomura, for example, which is a financial holding group, expects India to register a compound annual growth rate, which is CAGR, of around 6.6% between the financial year 23 and financial year 30, which will be the strongest growth phase since FY10. It adds that the stage is set for India to replace China as the high-flying geese, thereby unlocking its full growth potential, according to Nomura. We must pray that this will be proven correct in the next few years. I also liked what Nomura added here. About India, it said, a variety of factors like a stable political dispensation, focus on reforms, a simplification of tax administration and schemes like PLI and friend-shoring has put India in a sweet spot over the next 1 decade. An Indian origin top American congressman, Amibara, has said that India is much better suited than China to play a leading role in resolving the war in Ukraine because of the country's old relationship with Moscow. And this is correct on how India refused to be tutored by the West on resorting to bias because both of those nations are our old friends. We protected our domestic interests and in turn retained a stable economy. Where does the West stand in terms of inflation compared to India? Let's take a look at that. In the United Kingdom, the Organization for Economic Cooperation and Development last month projected that the United Kingdom will experience the highest level of inflation among all advanced economies this year with an annual rate of 6.9%. The food price there is still extremely high. In Germany, for example, it recorded a year-on-year inflation rate of 6.4% for June. This is the first time the rate has increased since February, according to provisional figures from the German Federal Office of Statistics, which is Destatis. This means that even basic goods cost on average is about 6.4% more in June 2023 than they had it in June 2022. In the United States of America, inflation has come down marginally, but the electricity prices have increased by 5.4%. This Morgan Stanley report brings me back to India's other sectors. India's advance is its emergence as a technology hub now, as is seen in Apple's intention to shift some iPhone production and assembling to India from China, recently opening its first physical retail stores in India, which is in Delhi and Mumbai. Amazon Inc.'s cloud computing division, which is Amazon Web Series, has become the latest company to invest in India. The company has planned to invest over 1 lakh crore rupees in India by 2030 to build its cloud infrastructure and create thousands of jobs. Even in manufacturing sector, Apple supplier plans to build a factory in our country focused on manufacturing AirPods. Taiwanese giant Foxconn is investing over $500 million in India to set up a manufacturing plant, especially in Karnataka and Tamil Nadu. Also add to it the semiconductor equipment manufacturing projects to be invested in India. All of these investments are expected to create thousands of jobs and generate employment for our people. If we as Indians will not be proud of our stability and rise in the past few years, who else will be? Thank you for watching.